Oil prices are greatly affected by supply versus demand. But what's really driving these oil prices today is supply shortages. We are seeing oil production decline on every level. If you look at the U.S., we went from producing 5 million barrels a day and we skyrocketed to 13 million because we started developing shale. Now, shale is the most expensive barrel of oil to produce. Why did we start producing shale if it's the most expensive barrel of oil to produce? Because they had no other place to develop. They ran out of conventional oil. Conventional oil is what we used to drill back in the 20s, 30s, 40s, 60s, all the way up until 2012. And so now the shale game is declining. And so you got Saudi oil fields declining, Russian oil fields declining. Why? Because where else are we going to produce oil? We've been burning 100 million barrels a day, and that oil is never coming back. And so here's the deal, guys. If oil prices drop, all they do is manipulate supply. For instance, when COVID was at full swing, we lost a demand of 10 million barrels a day. What did Saudi Arabia do? What did OPEC do? OPEC reduced the oil output by 10 million barrels a day, driving oil prices up. And we grew to over $100 a barrel, from $30 oil to over $100 a barrel. How? By manipulating supply. Every time Saudi Arabia, or every time the Houthi rebels drop bombs on Saudi oil facilities, it reduces supply. Right now, the EU, it's imminent that they are cutting off Russian oil supply. And if you look at what JPMorgan Chase and many other analysts have said, if we do that, we're going to see $150 to $200 oil. And so I'm going to read some news that discusses that. If you look here right now, oil prices are at $104 a barrel. Brent crude $109 a barrel. Morgan Stanley ups oil price forecast on supply fears. Bloomberg reported that the investment bank had estimated a supply gap of 1 million barrels a day in the third and fourth quarter, which would keep prices higher, with Brent seen averaging $130 per barrel. So they're expecting $130 oil at the last half of this year. Morgan Stanley also forecasted that the amount of Russian oil supply lost would be some 2 million barrels a day in both crude and condensate. That's up from an early estimate of 1 million barrels a day in oil and condensates in lost Russian supply. The investment bank's analysts noted that Russia's oil production had already shed close to 1 million barrels a day this month, which came earlier than expected. There is also a risk of price hikes due to a possible EU oil embargo. Okay. Now, this was reported on the 22nd. Here we are on the 29th. So fast forward to today, an EU embargo on Russian oil is imminent. Okay. And so they are planning to cut off Russian oil completely. Now, the reason why the EU has yet to cut off Russian oil was because of Germany. They were having an issue with it. And now, today, Germany no longer opposed to a Russian oil embargo. Germany, the main opponent of a full embargo on Russian oil imports into the European Union so far, has dropped its opposition to ban if given time to procure alternatives, government officials told. The EU started earlier this month the tentative discussions on imposing an embargo on Russian oil, but the bloc was split on a ban on Russian energy imports. The biggest European economy, Germany, resisted an immediate oil embargo, saying an oil ban would plunge Germany and Europe into a deep recession. In a major shift in position, German representatives to the EU signaled on Wednesday that Germany is dropping its opposition to a full embargo on Russian oil on the condition that it is given time to find a replacement to the Russian oil supply, the journal reported, citing two officials. So with Germany out of the way, there's no one else to stop or block a full EU ban on Russian oil. World Bank sees high energy prices for years after Russian war in Ukraine. The biggest energy shock since the 70s is expected to keep oil and other energy prices elevated for years as the Russian invasion of Ukraine is changing energy trade flows and consumption and production, the World Bank said in its latest commodity markets outlook report on Tuesday. JPMorgan, immediate EU ban on Russian oil could send prices to $185 a barrel. So a lot of analysts, JPMorgan Chase, many analysts are saying we're going to see high $120 oil, $130, upwards of $185 oil in the event that the EU bans Russian oil. Now, here we are. Okay. And so there is talks of a decline for demand due to a softening economy. But here's the deal. There's a lot of clickbait that talks about how American economy is dropping. And there's a lot of talks about China and any other countries that is going to cause a demand reduction. But here's the deal. A lot of the things that we read in the news doesn't actually happen. I mean, look what happened during COVID. We thought demand was going to plummet for oil. People were saying it's going to drop down to 60 million barrels a day. It only dropped down to 90, and that was a very short period of time. And people were saying that we'd never see $100 oil ever again. And here we are, over $100 a barrel. Okay. And so our economy, our American economy, is actually very strong. Job reports are showing that we have low unemployment. Things are looking okay. I mean, they're not looking amazing. Obviously, we didn't get that stimulus money. We're not spending as much money as we did during the COVID lockdowns, but we do see it's not growing, but it's also not dropping as much as they say they're dropping. Okay. And so demand is staying strong. I mean, we're blowing out 100 million barrels a day. And where are we going to get all the oil without Russia? Okay. Now, if you look, this was sent to me by one of my oil investors. And this is a website called longforecast.com. And they have a history of being pretty accurate when it comes to oil forecasts. Now, I don't completely agree with what they're saying, but they seem to be pretty intelligent when it comes to how they pick their forecasts. All right. So oil price forecast for 2022. And so they're expecting April to be around $104 a barrel, low 97. And then by December to be $125 a barrel to upwards of $135 oil. Now, I agree with that. Okay. Fast forward to the end of 2023. They're saying that we're seeing a high in October. Let's see. So in July, they're expecting a high of $150 to $4 oil, high of $163 in August. September, high of $174 oil. In October, $184 a barrel. And by 2024, April to be at $200 oil. Now that's all possible. I mean, if we get rid of Russia, if our softening economy flatlines or continues to grow, I mean, demand is growing worldwide. Demand for oil. The emerging markets are increasing their demand. I mean, they want to be like America. You've got plastic usage for oil continuing to grow. Every electric car they build, you need oil. There's many, many byproducts of oil and gas out there. Okay. And so I think by 2024, we're going to see $200 oil. Well, I believe it more now than I ever have before, but I'm very confident that Bloomberg, JPMorgan Chase, Goldman Sachs, all these guys are saying expect $130 oil by the second half of this year. And I have to agree with that, especially with the EU ban. I mean, there could be potentially see highs of $150 to upwards of $180 oil. I mean, where are we going to replace that oil? America is not producing enough oil. The Middle East is not producing enough oil. Oil is found underneath the ground. We're not making it anymore. and we're burning 100 million barrels a day. And I don't see any reduction for demand coming very soon. I mean, here's the deal. Yes, we're building electric cars. Yes, we're lowering the demand for gasoline and in electricity due to making solar power panels, but we continue to grow in demand. I mean, you got the emerging markets, you got other byproducts of oil. The usage in the demand for other byproducts of oil is growing. And so we've painted ourselves in a corner, guys. We need more oil, and nobody is investing in oil in comparison. If you compare it to 2012, there's no comparison. We are not spending enough money for tomorrow's energy demand. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in investing in oil, I'm talking about at the ground floor. I have a 50 well oil project that we're developing in New York. And if you're interested in getting involved, please give me a call. Look in the description below. You could either fill out my form by clicking on the link, and my phone number will be down there. And if you'd like to call me, I'd love to chat with you. All right, guys, thanks.